So you've probably heard the case of why it's a tough time to buy a home right now, why a lot of potential and soon-to-be home buyers are sitting on the sidelines because of interest rates and everything going on. In this video, I really want to talk about the case for why you should buy a home right now. What are the benefits of buying a home right now? How can we take advantage of these lower home prices that are currently in the market and also get a much lower than market average interest rate when you buy a home right now? We all know rates are higher, but there are opportunities to get a much lower interest rate in order to make that home you're looking at a little bit more affordable. So let's jump into it. As always, I'm Bryce Greenleaf, local real estate agent here in the greater Seattle area. So many of you have reached out to me here from YouTube over the years when you're looking to move over here or you're just looking to buy a home in the greater Seattle area. Feel free to reach out to me. I would be more than happy to help you with that. But like I said, we're going to talk about buying a home right now, buying a home in this very uncertain market. You know, interest rates have gone from 3% to hovering right around 7.5% right now. It's caused a lot of uncertainty with people that are looking to buy a home, and it's made a huge impact on what they can actually afford. Going from 3% to 7.5% when it comes to interest rates does make a huge impact on what that actual monthly payment comes out to. However, in this video, I want to talk to you about why some people are actually taking advantage of this time, while others are on the sideline, while the masses are waiting and holding off. Why going the opposite of the masses can often be the best choice and give you the best option financially in the long term. So we've gone on this cycle for a few years now, really when COVID started and home prices really started to escalate. You can see here, prices really topped out April, May of 2022. This is King County median home prices. They really topped out at about $995, just under $1 million. From there, you can see we have gone down with those home prices. Currently, the median home price here in November of 2023 is about $895,000. So we've lost in King County median home price, we've lost about $100,000. Roughly 10%. Now, on top of this, we also have the cyclical nature of the market, which is important for you to keep in mind when we're talking about the best time to buy a home. You can see in the fall time, in the winter time is really when those prices will be at their lowest. And then as we get into the busier season in the springtime and summertime, that's when those prices will hit those peaks. Now we are moving into that fall time. You can see those prices have really started to plateau. They're not falling at any extreme rates. As we go through here through the rest of November, December, and January, we may see a slight decline in those home prices, but everything we're seeing right now is showing us that those prices really have hit the floor for the most part. Do not expect any large dramatic drop off in home prices. So I want to run a scenario by you. I want to talk about the benefit of buying right now versus what we saw at the peak time of those prices in April of 2022 when everybody was in the market. So April of 2022, home prices were $995,000. Today, they are $895,000. Now, April of 2022, interest rates were about 5.5%. Right now, they're about 7.5%. Now, we're going to run these scenarios based on these numbers. Now, one thing to keep in mind, some people may say, oh, I'm going to wait until rates go back to 3%. They won't. Rates will never go back to 3%, at least any time in the near future. We are hoping, and it is very plausible, that rates will go back into those 5% range like we saw in the spring of 2022 when so many buyers were out in the market. That is very plausible. Nobody knows when it's going to happen. Maybe that happens next year. Maybe it happens the year after that. But it is very plausible that we get back into that 5% range for interest rates. Now let's take both of these scenarios and just say you're going to put a 10% down payment so we can look at the numbers. In April of 2022, your principal and interest payment would have been $5,084. Today, at the lower home price with the higher interest rate with 10% down, your principal and interest payment would have been almost $600 more at $5,632. So yes, you can see how much of an impact just 2% on these interest rates makes on your monthly payment. This is also with a $100,000 cheaper home. So it does make a huge impact. So a lot of people are saying, well, you know, it's $600 extra on my mortgage payment that I really don't want to pay right now. It doesn't make sense for me that if I wait for those rates to come back down, I can get the better interest rate on my home. The tough thing there is when those rates come back down, everybody is going to flood the market again. When rates come back down into the 5%, everybody that's been waiting on the sideline, and trust me, there is a massive number of people, a lot of my personal home buyers that I've spoken with over the last year or so, and just a lot of people that are waiting on the sidelines that want to wait until interest rates come down. Well, when those rates come down, what's going to happen? Those prices are going to skyrocket again. They're going to go back up 10, 15%, if not more, because everybody that has been waiting on the sidelines is going to be jumping into the market, and it's going to be a madhouse. So yeah, you might get the better interest rate, but you are going to pay exponentially more for that house than you would right now. So how do we take advantage of having the lower home prices right now and not having to deal with this 7.5% rate? Here's the great option. This is called an interest rate buy-down program, specifically a 2-1 buy-down. Now, this is a program that many of my clients have taken advantage of over the last year or so, and many people in the market are taking advantage of in order to get the best of both worlds. So how this works is you're buying this home at $895,000 at the bottom price that you're going to get it, and you're never going to get it for that price again when rates go back down. You secure that home at that bottom price. You're qualifying for that market rate of 7.5%, and we're implementing this 2-1 rate buy-down program. So a 2-1 rate buy-down program is a 2-year temporary buy-down. In year one, it would be as if your interest rate is 2% lower than the market rate. So if your market rate was 7.5%, year one, your payment would be based on a 5.5% rate, the same rate people had in the mass market of April of 2022. That would take your payment down almost $1,100 a month. It would make your payment $4,573. That is for the first year of this program. Year two, it would be as if your payment was based on a 6.5% interest rate. So still giving you a lot of savings. It's kind of cutting that in the middle, and your principal and interest payment in this scenario would be about $5,091. So still almost $600 in savings from that market rate, and would really be right around that principal and interest payment for buying that home in April of 2022. Year three is when you would then go to this market rate of 7.5%. Now, the great thing about this 2-1 buy-down program is you can refinance out of it at any point. So let's just say in year two, those interest rates go back down to 5.5%. You can refinance out of this program into a 30-year fixed 5.5% rate, and now your payment is closer to that $4,500 versus the $5,600 it would be with buying at a 7.5% rate right now, or the over $5,000 it would be buying with that same 5.5% rate, but when those prices escalate as the market grows with those drop in rates. This is how you can get the best of both worlds. The old adage is, once you buy a home, you can never renegotiate that purchase price that you bought it for. However, you can renegotiate your interest rate when those rates come back down, and it's very plausible those do come back down into the 5% here at some time in the future. You can refinance into that new rate and give you that ultimate lowest payment, combining the lowest home price you can get and the lowest interest rate. And in the meantime, we hold you down with that temporary interest rate buy-down program. So very possibly you're never actually paying at a 7.5% interest rate. Now, like I said, this is a program that many people are taking advantage of right now. A lot of people don't know about this program, and they're sitting on the sidelines because they don't know this is an option. So if you are thinking about jumping into the market right now, or you just really want to buy a home, but you're really scared about the 7.5% rates, check into this program and see if it would make sense for you so you can still get that home at its lowest dollar price. Now, you may ask, what does it cost to do this program, this 2-1 buy-down program? There is a fee to do this program. The great thing is, oftentimes we can get the seller to pay for it for you. So this fee is usually based on 2 percentage points. So if you're buying a $900,000 house, this might be $18,000 to $20,000 to do this interest rate buy-down program. We have multiple times, many times, we have negotiated to actually have the seller of the home that you buy pay for that interest rate buy down program. Now, how can we do that? Because the market is so much softer. This is where you have more opportunity, more flexibility, and more leverage in your ability to negotiate and get a better deal. Not only can we negotiate the purchase price much more easily in this market, we can negotiate the seller to actually pay for some of your out-of-pocket expenses, and specifically this interest rate buy down program for you, so they can pay the $20,000 to get you this program to have a much lower rate, saving you lots and lots of money. So if you are thinking about buying a home, you really are at a point where it makes sense for you financially, but you've just been worried about that interest rate and you've been waiting on the sideline, reach out to me. I'd be more than happy to run through a scenario for you and see if it would make sense for you to jump in the market and take advantage of all these possibilities, or simply put your comments down below and I'd be happy to address them. Thanks for watching this one.